From this video onwards, we're kicking off a series that lays down the fundamental rules you need to follow on your journey to become a money-printing trader. These rules aren't just guidelines, they're the building blocks of a winning trader's mindset. Think of them as a solid framework that you'll use to shape your path to trading success. This series will be extremely valuable for people that are just starting out or for people who have been trading but haven't been profitable, because it will provide you right framework and structure for trading. Today we're going to talk about trading rule number 1, which is to avoid big losses. Market is unpredictable because there are countless variables that are out of our control. But there is one thing that is still in our control. It is how much we're willing to lose in the market. The quadrants of trading. There are 4 quadrants in which a result of any particular trade could be categorized in. The first quadrant. Small profit. You execute your trading system and the market rewards your precision. The price reaches your predefined target at a favorable risk-to-reward ratio, typically 1:2, 1:3, or even 1:1. Which means you gain $1 for every dollar you are willing to lose. The second quadrant. Small loss. This happens when your stop loss hits, and you undertake a loss which was a part of your system. This is a scenario that you will face a lot, and it is completely okay to have series of small losses. Just like small profits, this outcome is totally respectable. The third quadrant. Big profits. This is a quadrant when your trade surpasses your expectations and it results in huge profits. This is most desired outcome, but it occurs least often. The fourth quadrant. Big loss. This is the quadrant where your losses exceed your predecided risk for a trade or predecided risk of the day. You should avoid such scenarios at all costs, because they can screw up your months of hard-earned capital and profits in a single trade. You should do everything in your power to avoid these losses. Big losses can occur in 2 ways. 1. Big loss. This can be avoided by using a stop loss. Like I said earlier, we cannot control the market, but we can control how much amount we're willing to lose in the market. By managing our position size and our stop loss, we can control the amount we're willing to lose in a particular trade. Like I have told in my previous videos, you shouldn't risk losing more than 2% of your capital on a single trade. The order of applying this principle is: Step 1. Decide your daily risk tolerance. It is ideally not more than 5% of your capital. Step 2. Determine risk per trade. This is ideally not more than 2% of your capital size. Step 3. Determine stop loss based on your system and analysis. Step 5. Lastly, based on your stop loss size and risk per trade, calculate your position size. I have a complete video on risk management, in which I go in much more detail of each of the steps mentioned above. I will link to in description. You can watch that video after this one. Multiple small losses. This happens when you overtrade, like you decided to take 2 trades, both ended in a loss, and now you want to recover your loss and start taking more trades. This will not only multiply your losses but will also toll on you psychologically. The best solution to this problem is: once your daily risk limit is reached, turn off your trading screens. No more trading whatsoever. Don't even look at the charts, just close the window and do something else. Go read a book, analyze past trades, watch videos, or do anything, but do not open your trading window again before the market closes, because it will lure you into taking more trades and losing more money. Daily risk limit means if I lose this much of money in one day, I will stop trading. If you respect your daily risk limit, you won't take a big loss, that's for sure. I will bring a complete video focused on overtrading. Stay tuned to the channel. If you follow above mentioned steps, you will never encounter a big loss, and your trading journey will not be hampered. Your psychology will become stronger day by day when you trade a system. This concludes our rule number 1. In the next video, I will talk about rule number 2 of a successful trader. So, subscribe to the channel if you haven't already and like the video. And always remember, avoiding big loss is rule number 1 for a reason. If you want to learn more about how winners manage their risk, watch this video. And, if you want to learn how winners grow their trading accounts super fast, watch this video.